to your markets. Daily market commentary for Friday, the 21st of February, 2020. And, well, it's Friday, but the markets continue to focus on every coronavirus headline. It was, without doubt, the driver of all things this week. There seems to be little evidence thus far that the number of new cases is peaking. And in the case of South Korea, the Prime Minister has declared an emergency, with 2 cities being declared special care zones. However, the big unknown is the long-term effect on the global economy. Trying to forecast that impact is almost impossible. Yes, China is going to be severely affected, but so too are its major trading partners. Tech companies like Apple, who are heavily reliant on China to produce parts, have already warned of an impact, and yet stock markets, while volatile, continue to make new highs and shrug off the potential impact. Even St. Louis Fed President James Bullard, while speaking with CNBC, claimed there was a high probability that the coronavirus will, quote unquote, blow over. So what would Friday bring? More of the frantic dollar buying we have seen during the week? More traders rushing to buy gold? The day will begin with some UK data. The biggest impact will come from a better than expected manufacturing PMI number, which saw sterling rally from 128.90 to 129.50 against the dollar. Elsewhere, dollar yen will start the day with a quick 50-point drop from 112 down to 111.50. But by the time the USD began, had recovered all the way back to 112. Gold will continue to build on recent gains, and yesterday's break of the important 1616 level, making new 7-year highs at 1643. Eurodollar will once again try to bounce over 108.20, but was back to 108, the figure, by the time New York got going. Wall Street opens with the Dow Jones immediately dropping by 200 points and is standing to down 300 points by mid-morning in the US. US manufacturing and services PMI data comes in much weaker than expected, sending the dollar spiraling lower. A market already sitting short of Eurodollar sees an immediate spike from 108.05 up to 108.65. Dollar yen would head down to 111.55 from 111.95, and Aussie, Kiwi, and Canada would all benefit from the sudden dollar reversal. Aussie would squeeze up to 66.38, while dollar CAD would drop down to 132.02, which was also aided by better than expected retail sales. Better than expected existing US home sales did little to cushion the impact for a market caught woefully long of dollars in the week's moves. Gold, however, will continue as spectacular and higher, extending the day's rally to as high as 1649. However, as is often the case on a Friday, markets slowed to a crawl early. The weak data, coupled with the coronavirus fears, had the Dow Jones close down 227 points, or 0.78%. The Nasdaq fared even worse, ending down 1.79%. The end of a week full of dollar gains and records for US equities came to a crashing halt. Onto our technical piece, and Eurodollar. Well, we had quite a spike higher during the day, as already described, on the back of some weak US data. And obviously the market is caught short from a steep downtrend from the beginning of the month, when the naysayers will cast a cloud of doom and gloom over the whole move. Not for me to say whether that's true or not, but I will attempt to balance that argument. Firstly, Euro has come a long way in a short space of time. We've moved from almost 111, about 110.90, all the way down to a low of 107.78. That is a pretty sharp move for Eurodollar in the space of a couple of weeks. Keep in mind that Euro is the most liquid and heavily traded pair in the FX world. Some big levels were broken on the way down, some of which I've highlighted on this chart, not to mention the intraday tops from the move lower on the month. Yes, if you're a bear, it's frustrating, but there are a lot of important levels for Eurodollar to break back above before I would say this move is over. And keep in mind, even though I haven't shown it here because I wanted to keep the chart clear for you, the 50% retracement on the move lower on the year, so I'm going back to here, is for 112.40 down to 107.80 for round numbers, comes in at 110.10. So there's still plenty of room to fade the rally if that's your view. If, on the other hand, you now turn to a bull, the low from the middle of last week at 107.75 is now the level which obviously needs to hold on the downside. So with that, I hope everyone had a good week trading. I hope you all had a good weekend, and I wish you the very best of luck in the week to come. Cheers.